watching ET Now, and this is our special coverage of Battleground Bihar, the street view. It's been a big setback for Prime Minister Narendra Modi. The BJP has suffered a huge blow in Bihar as the Mahagathbandhan has led by Chief Minister Nitish Kumar staging a spectacular comeback. He's won over 160 seats. In fact, it's a hat-trick for Nitish Kumar, who fought the elections jointly with Lalu Prasad Yadav's RJD and the Congress. In a seesaw of sorts, early trends have indicated a grand win for the BJP, but the picture changed dramatically mid-afternoon as the counting progressed. For Modi, who put all at stake in the Bihar elections, it's a double whammy. He will have to solely take the blame for the defeat. Not just that, his hopes of mustering the Rajya Sabha numbers through a big win in Bihar has now come to a halt. The Mahagathbandhan has said that the BJP is paying a price for communalizing the Bihar election process. But the big question we're trying to answer today is, what does it mean for the markets, and what is the Lal Street's view on that? Having said that, Nikunj, the good thing is that the market has been smarter than any one of us, and it's already begun pricing this in. I mean, there's a reason why the market went at 79.50 in Friday's session.
Yeah, frankly, you're right that markets were pricing in a BJP defeat. The surprise is the quantum. It's a binary verdict, but it may not be a binary event for Indian markets because, frankly, and historically, we've seen that the impact of such moves, such events, they don't last for more than a week or so. If you analyze what happened to markets after the BJP Delhi loss, Nifty a week after actually was in the positive territory. So we've got some examples, and those data points will come up on your screen, that the impact of market in the short term could be about 2 to 3%, but long term the impact of such events on the market tends to get neutralized. Markets always focus on two numbers, political numbers and earnings numbers. So politically, numbers are not looking strong. Yes, that could be a one-day affair, that could be a two-day affair, that could be at max a one-week affair. But frankly, I worry about the earnings setup. I worry about the global setup. So this verdict, Ayesha, is coming at a time when we've got other problems, which is earnings are poor, Fed could move, globally things are looking slightly shaky. So we are honestly getting twisted from all ends.
Oh yes, that we are. But here to analyze the near-term event and whether or not come tomorrow morning, are you going to see a knee-jerk reaction or not? A battery of experts is online with us, and let me bring on board and welcome the gentlemen joining in, Anand Tandon, Sanjay Dutt, R Bhat. We've also got with us Ajay Bagga joining in, as well as Gautam Trivedi from Religare. Gentlemen, good evening. And Sanjay, let me start off with you first. What happens tomorrow, considering the market has been smarter than any one of us, been pricing this sort of a verdict in the Bihar election? Do we see a gap down? More importantly, does that gap down immediately get bought into come tomorrow morning?
You know, in my opinion, that market had more or less priced this event in. That's the reason why last few trading sessions we've been continuously drifting down. In fact, some days we've had aggressive sell-offs. I would be surprised that if tomorrow we just see a one-time kind of a wash coming in the morning, everything goes down, and then, you know, things return to normal, and we just about probably end up marginally negative or even positive, because the most important thing the markets now look at, the event is out of the way. This event was a drag on the markets. Now it'll be back to business, back to focus on earnings, fundamentals, and a lot of other things that market has to, worry about. And similarly, the government, because the attention of the current ruling government, that's the political party, was totally focused on this election. A lot of central ministers had their bandwidth totally focused onto this area. So it's obviously going to be a positive in a manner that the event is out of the way, and they will seriously look at other things now.
Ajay Bagga, this question is coming your way. Frankly, Bihar verdict is the talking point today, and it will remain the big talking point for next couple of days. But historically, we've seen that irrespective of what the mandate has been, the impact of some of these assembly elections, at least from a market standpoint, has been very limited and restricted.
Yeah, totally, Nikunj. And as you were mentioning, the Delhi election, the debacle had a very positive move for the market. So is it completely discounted in? You look at the short build-ups, the puts buying and in the call writing in the Nifty future, in the Nifty options market. It's been at a huge high, nearly about 70 lakhs of puts have been bought, nearly 45 lakhs of calls have been sold. So market was very tentative going in. We had a good correction last week already. But this being much worse than anticipated, this kind of a drubbing, I think there'll be a lot of media, negative sentiment, a lot of opposition, negative sentiment on the government and the entire reform process. There's a big question mark around it. What will be the reaction of the government? A resurgent opposition will try to corner the government, and we are seeing foreign press already carrying it as a zero sum, a loss for a Modi kind of a way, because you had positioning in the elections. Last elections was not Kejriwal versus Modi, but this was Nitish versus Modi very clearly. And we have seen Bloomberg, we have seen FT, all foreign press already carrying that the Indian reform process is getting derailed. I think in that crescendo, you have a chance of the market reacting, overreacting on the negative side tomorrow, and you could even see 7,800 being tested and the market going further lower.
Sentimental dampener it definitely will be, Mr. Bhat, and I want to get you in on the discussion. But what happens to the larger agenda of reforms? Does that become murky now? Because after a washout monsoon session, can we expect the same with the winter session in the parliament?
Well, quite possible, because I think if the noises being made by the opposition parties is any indication, I think it will be a washout session. But that said, I think there are positives to be drawn out of this, because if the government sticks to the straight and narrow path of development and continues the reform process, maybe they will be able to redeem themselves come 2019. So I think that is the lesson from this. That is, don't get into peripheral issues, control the fringe elements, go the straight and narrow path of development, and continue with whatever you have been doing. And it doesn't matter, of course, you may have some setbacks in Parliament. GST may be difficult to come through, but if India has lived without GST for 68 years, I think it can live for another 3.5 years. So I don't think that is as much a big issue as, say for example, even the land bill has been stymied. So I think they have found some other solution to that through the states. So I think things like this will keep happening, but I think there are enough executive powers in the hands of the government to push through the development agenda, push through reforms, without necessarily going to Parliament for everything. So I think that is a positive lesson that we can draw from this. But that said, I think the scale of the defeat was something that probably that will unsettle markets a bit. But if you have seen for the last fortnight, I think the Nifty has come down by something like about 350 points. I think the market sort of anticipated this, but probably the scale might be still leaving some, probably another 50-100 points of a setback as far as the market is concerned for tomorrow. But I think you have results coming. I mean, we're in the middle of the result season, probably another 1 week of results, and I think the results will give direction to the market after 24 hours.
The fear is that this market is still enjoying what would be called as a Narendra Modi premium, and then Narendra Modi premium with each passing day is only getting diluted. And now it's official that Narendra Modi's honeymoon period is getting over. Will that lead to some degree of adjustment? Gautam, so let me throw that question to you. This Indian markets are enjoying what would be called as a Narendra Modi premium. That premium needs to get diluted now. So what happens when that premium adjustment will go away?
See, I think let's keep one thing in mind before we jump to all sorts of conclusions about this defeat. Yes, the extent of the defeat obviously is staggering. We were there only about 10, 11 days ago with a delegation of fund managers, and we were there for 3 days, and I think we pretty much came back with the conclusion that the BJP would find it hard to win this election, but we never expected the extent of the victory. So that, of course, clearly is a shock and surprise. But I think let's just keep one thing in mind, that unlike Haryana and Maharashtra, there was virtually no anti-incumbency here. So I think that's really something which either the BJP did or did not factor in, I'm not sure, or did not fully appreciate. But the reality is that I think we've had Nitish Kumar there for 10 years, and there is no anti-incumbency, and that's really what has I think hurt the NDA numbers.
Anand, experts would argue that, look, the basic premise for this election was not development, and this is where I guess BJP lost out. So do you think now there would be a strong emphasis or a strong thrust on the development agenda once again, because it was the development agenda, promise of economic prosperity, which really got NDA to power?
Well, Nikunj, I think, first let me also just weigh in on this expectation versus reality. I don't think even Mr. Modi would have expected the kind of defeat he's been doled out. I'd be very surprised if the market had factored it in. So I would differ substantially from what the speakers before me have said in terms of whether or not this is in the price. I think you will be surprised at the kind of fall we may likely see. Couple that with the fact that the bond yield in the US has actually gone up because we had a fairly strong set of numbers in terms of non-farm payroll on Friday. The market didn't react that much, but the numbers were very strong, and which means that you're bringing back the external factor in again. I think the market will find it difficult to move up from here, if at all. Now, with that out of the way, I again differ whether or not there is a strong development agenda. If you look at the overall budget of the central government, the oil subsidy gone for fortuitous reasons, but gone nonetheless. Power, big problem that we have, 5 lakh odd crores of debt. You've actually come up with a reasonable policy which, if the states were to adopt it, can get sorted out. DBT, you've already got rid of the LPG subsidy. You have already started experimenting with PDS. I think the government has done a lot more. I mean, I don't even want to go down the coal and the telecom and all of those kind of policies. I think they have done a lot more than people give them credit for. The difficulty is that this kind of economic rationale is difficult to explain to the general public. The result of all of this is that the government's expenditure is actually shrinking. Now, when you look at the overall economic growth, you are not going to get export growth coming in given the weakness in the global market. You don't have consumer growth coming in because of there is no job creation that has happened in the recent past. Most industries are operating at low capacity utilization, therefore private sector enterprise is not going to happen. Government has to step in. Now, if you're also simultaneously trying to reduce expenditure, that is counterintuitive. And this is where they should stop listening to foreign brokers and start spending money. The deficit matters not at all at this stage. If the government had got the right advice, they should have been going out and spending and spending and spending. That is what was missing. I hope they get and correct that and not bother too much about so-called fiscal prudence at the wrong time of the economic cycle. I think if that message goes through, you will still find that the answers are easier to explain to the public why the government is doing what it's supposed to do.
Anand, how I wish that there was another assumption to this story, that earnings would have been on our side. We could have completely ignored all and every foreign brokerage. But on that note, we're going to take a very quick break. When we come back, continue our discussion with a battery of experts and find out what else could be moving the markets and what could be the big concerns now that BJP has had a washout in the Bihar elections. Okay, back with Battleground Bihar, and this is the D Street verdict. The verdict from Bihar elections has been skewed extremely in favor of JDU. It's a washout for BJP, and we're trying to understand how the market is going to read into this. A market, remember, which has been smarter than any one of us, perhaps already began pricing that in all of last week, which is why perhaps you had such a somber, lower dragging market all the way to 79.50 already. A gap down it sure may be come Monday morning, but will that get bought into? That's the sense that we're trying to get, and our research team as well is waiting by to try and understand the pulse of the market. Ajay as well as Avan join in for more on that. Ajay, and first really a sense of what the dealing room chatter is post the Bihar election verdict.
Well, Ayesha, you are so right in saying that, because in the last 9 trading sessions alone, the Nifty has already lost 300 basis points. Add up 100 or 200 more tomorrow morning in gap down. In fact, all the WhatsApp groups and all the trading community I've been interacting with are not ruling out that kind of a opening tomorrow morning. With this massive landslide victory for JDU or the Grand Alliance, and BJP clearly, was perhaps not expecting this kind of a turnout. And remember, we all know that the stock market complexion is tilted towards their pro-BJP, and probably that will hit the sentiment very badly tomorrow morning. Though, most do not rule out that, of course, the market will be in value zone. But don't forget the sword is also hanging from the October jobs data, which was released on Friday. And traders are also reading about that. In fact, Barclays does talk about that not only markets, rupee is likely to turn weak tomorrow morning as well.
Right, Ajay, thanks a lot for that. Now, the election verdict may be binary, but according to historical data points, any state election verdict has never had a binary impact on Indian stock markets. And that's interesting, that in the short term markets may adjust largely because of sentiment, but ultimately it's law of averages which kick in. Awan is standing by with some excellent work on how Indian markets have moved post after assembly elections.
Absolutely, Nikunj. As you said, the proof is really in the pudding. In terms of the market reaction, it hasn't been too adverse, post the assembly result that have been declared. To put into perspective some numbers, now the Delhi assembly elections, that was in February this year itself, with the BJP losing completely. But despite that, for the first week, 3% is what the Nifty gained, the Sensex 2 firmly in the green, and the 1 month return also was a return of 1.7%, with the Sensex gaining 1.3%. When the results were declared in J&K, it was a victory for the BJP, and this was in December 2014. The Nifty lost out very marginally, just about 1/3% in the preceding week, and the Sensex lost out about 0.4%. For the 1 month, though, it was a stellar gain. The Nifty piled on the gains of close to 7%, and the Sensex a very convincing 5% gain. And then there was the all-important Maharashtra assembly elections in the month of October 2014, where the BJP once again emerged victorious. The Sensex and the Nifty gained over 1% in the week after that, and in the 1 month return, here's where you really saw the bulk of the gains pile on. For the Nifty, it was 6.6%, and for the Sensex, 6.2%.
Right, Awan, thank you for that analysis. Shankar Sharma, Chief Global Trading Strategist with First Global, joins us live from Dubai. Shankar, good afternoon. Thank you for joining us. How do you see markets opening tomorrow? Because markets were pricing in a BJP defeat, but nobody was pricing in a landslide victory for others.
Yeah, if you look at the last 1 month's trading, India has lagged global markets quite significantly. We've seen, I think, between 7 and 10% rally in most markets across the world, while India has done quite miserably. So to some extent, the market was factoring in, a BJP loss. But yes, whether it was a loss or an absolute rout, that is really the question, whether the market had understood the extent of the loss. And in my view, I don't think the market really factored in a 170 seat for JDU and a 60-odd seat for the BJP coalition. So I think it will definitely have an effect. And in my view, the effect of the Bihar Assembly election should not be read only as a Bihar Assembly election results. That would be a mistake. It is not a Delhi Assembly result or a J&K result. It has implications far beyond the shores of Bihar. I think if you really think deeply, it has implications on even 2019 outcomes, because Bihar and UP together put in this government into power with a majority. Over 100 seats came from these two states. Based on this outcome and these results, and possibly a UP problem as well in 2017, it is probably highly certain that the BJP won't get to 282 in 2019. It might stop at 250, might stop at 240, might stop at 200. We'll see. Because all other states where they have won almost everything. So if you look at Maharashtra or Gujarat or Rajasthan, Chhattisgarh, MP, it was like a sweep. So even those, are unlikely to be maintained at those levels. You almost inevitably after 5 years, you do end up giving up some seats and some vote share. So the real analysis one needs to do is the implications of these results on the larger results, on the larger polls, which are still 3.5 years away. But markets will start to figure in
those outcomes. And I think those are not looking good at all. That despite 282, the government was unable to push through a lot of its agenda in the parliament. So with these results, those are going to become even more difficult to achieve. So I don't think we should be superficial in our analysis and just limit it to a Bihar assembly outcome and nothing matters beyond Bihar. I think Bihar matters a lot more than we are giving it credit for.
A lot of people have been saying that, the next milestone for the BJP, of course, is going to be the Uttar Pradesh 2017 elections, and they as well are going to be extremely crucial post 2019, of course. But Shankar, just in the near term, Bihar aside, we've been grappling with extremely weak earnings, and you've got an impending Fed rate hike, which looks inevitable now by December end. What could be the extent of damage in the near term for the market?
I think the damage will not be limited only to India. I think overall emerging markets are in a great deal of strife. Emerging markets have lagged this current global rally as well. So on top of that, a very poor India outlook, coupled with very poor outlook for commodities, which will affect the commodity rich countries like Brazil or Russia or Indonesia. I think overall emerging markets look to be in terrible shape, and if you talk to fund managers managing emerging market money, they will tell you that they are faced with huge redemptions, which is again translating into negative flows from countries like India. So overall, if you talk about from here on till the end of the year, things look pretty grim for sure.
Shankar, whereas the India pitch has been centered around Narendra Modi and the assumption that reform will now be given, if I look at the market behavior, in last 18 months, the best performing index actually has been the healthcare index, and the best performing stock is Maruti. So frankly, this market is moving independently of what the government action is. So do you think we should really focus on that end of the market?
Yes, I agree, which is exactly the point I have made several times, that the broad market is actually down in dollar terms from the time the last Lok Sabha elections happened. And within this market situation, what has done well is actually, very little to do with government policies. I mean, Maruti was doing well even prior to, the Lok Sabha elections, and healthcare, or for that matter, IT, etc., have nothing to do with domestic, politics. So really speaking, at the other end of the market, which has done very well is the small caps, which again are not really, an outcome of government policies. They are outcome of really company level managements and company level business models. But your Larsen and Toubros of the world, or your Tata Steels of the world, etc., have all been hurting badly. So, yes, we need to go back and focus on companies and businesses which are not going to benefit from any strong government action. We have to go back and look at core business models and see whether they will do well irrespective of who's sitting at the center, or whether the person sitting at the center is weak or strong. So, in my view, we need to recalibrate. I mean, I already calibrated a long time back. I don't think everybody else did, but I think everybody else will have to come around to that single view, that let's forget about the big macro trade or the big macro local revival trade. Let's focus on what is anyway looking good irrespective of who's running the country and with how much strength.
It's an interesting tweet, Nikunj, by Shankar just an hour back, which says that he was reminded of Larry Ellison saying it's not enough that he wins, all others must lose. And he says it's very apt looking at today's verdict. But Shankar, you go ahead and enjoy your Sunday. We're going to let you go on that note and take a very quick break on that note. When we come back, we're going to continue our discussion with our market experts.
All right. Thanks for staying with us. We've got a full house, and let me once again introduce our battery of experts: Anand Tandon, independent market analyst; Ajay Bagga, Sanjay Dutt. We've got Gautam Trivedi, and then R Bhat. Gentlemen, thank you for staying with us. Sanjay, do you think, frankly, it's time to move on and let's talk about other concerns, which is earnings, what US Fed could do, and what could be the shape of commodity cycle? Because irrespective of what the Bihar outcome is, tomorrow markets would adjust.
I think so, Nikunj. I think the focus has to shift on what Shankar correctly said on what's going to happen globally on emerging markets. Where do we stand in that spectrum? Earnings that you correctly said. And the first signs of it, we already saw what happened to State Bank of India over the weekend. if you're going to see that kind of a turnaround coming in various, battered kind of companies and battered sectors, of course, what the Fed does in December, I think those are going to be more important than the politics. I don't think we can take a crystal ball and look at 2019 impact of the Bihar elections in 2015 November. In politics, 24, 48 hours are too long. So, I really can't game 2 or 3 years ahead what happens. No one would have thought in 2011-12 that Mr. Narendra Modi, with that kind of a majority, 330 plus for NDA, would be in power in 2014. So on that note, I think the focus has to shift now on fundamentals, what the government does in terms of reform process. Besides the legislative process, there's a lot of executive reform that can be done. Just yesterday, I was reading a report by State Bank of India titled 1,000 Small Steps, and I forwarded it to you also. There has been a lot done. There is a lot more to be done. So the focus has to shift on individual stuff, earnings, global outlook, sectors, stocks. I think politics will be out of the way in the next week, 10 days. Bihar will be done with. In fact, in my opinion, maybe the next day or two. Why week, 10 days?
In fact, I'm going to get in some brokerage opinion as well. And, brokerages like Barclays have said that Bihar election verdict has been an additional stumbling block. They've said that the Bihar verdict is a material sentiment dampener for the markets. US jobs data, Bihar polls are going to, weigh in on the currency come Monday morning. IIFL has said that the Bihar loss is going to spur Modi to push harder on reforms. He says markets may have already factored in a BJP defeat. Bajaj Allianz says that the near-term headwinds for markets in Bihar polls, the passage of economic reforms in the winter session now looks extremely doubtful. And Ajay, I want to come to you, because you also seem to be in agreement with the point that Shankar was making right now. The fact that emerging markets in any case are a big question mark, and the health of the economies, we in any case have been grappling with the way earnings have panned out. What does an investor out there do in a scenario where perhaps market weakness is going to play out for the next 1 to 2 months? Is it time to now start building long-term portfolios? Do you go back to the drawing board? What do you do right now?
Yeah, very tough, Ayesha, and I think tomorrow is going to be highly volatile, so might be better to stay on the sidelines and let the market digest all this news flow. There's additional Chinese data which is coming today, which is again going to roil Asia tomorrow. So we might have an accentuated downward momentum start of the market. But long-term investors, I would say, stay invested. You can pick up cheaper stocks later in the week. As good a time to invest as ever for long-term investors. Few sectors will get re-rated because if your thesis is GST does not come in, we've given a much higher valuation to sectors like logistics, sectors like FMCG as beneficiaries of GST, for example. So if the entire reform process gets stalled and winter session looks like a washout, you will see some amount of re-rating coming in sectors like these. So might be better to stay on the sidelines even for long-term investors. You'll probably get lower levels to come in, but I'm not very concerned per se about the fundamentals. I think another 2 to 4 quarters, you would have a much better scenario by the logic of the cyclical nature. You have seen that in the commercial vehicle segment. We used to have a replacement cycle of 4 years. It got extended to 6 years, but it's come back. Same way, private capex is not happening. We have very low capacity utilization. It is going to catch up with the rate cut. It takes 8-9 months to come through. Aggregate demand is impacted. It's not going to come back overnight, but over 6 months, you will see the natural fundamentals of the economy carrying it higher in a cyclical manner. And stocks will front end it. Stocks will start moving 6 months before that is happening. So I'm not that bearish, but sentiment and the media frenzy, the opposition attack is going to increase. So very difficult to be a disciplined investor for the next few days as this will reach a crescendo.
I think the environment is going to be very, very noisy, but I have a limited point here. And Gautam, I want you to come on that point. And my point, Gautam, here is that right now, all state ministers, they want foreign investment. They want local investment. They are ready to really, give a red carpet welcome to someone who's investing in their state. State have been empowered more. So going forward, if I look at the big picture actually is that state wants a better nation.
Now are you referring specifically to Bihar, or are you referring to?
I'm referring to I'm just referring to the common thread now, starting from Rajasthan to Bihar, go east, go west. That's the common agenda with every state minister, that they want their individual states to progress, and they would be competing with other states, and now states have been given more power. So such a verdict, I guess, on an aggregated and on a national politics scheme may look bad, but individually it's no harm.
No, but here's the thing. Even though we had a Nitish Kumar government for 10 years, significant improvement in law and order, infrastructure, and to some extent electricity, let's not forget the fact that people are still leaving Bihar and then going for jobs outside. So he's actually has been unable to bring in private sector investment, unable to create jobs. Now, is that necessarily going to change in a third term? God knows. The fact of the matter is that was the single biggest area of weakness and concern, which of course the BJP tried to make the most of, but unfortunately caste, I think, remains specifically in Bihar and maybe for the most part also in UP, a big concern. And I think that is something which you can't get around, right? So that's the problem. So I think the issues in Bihar and UP are very different from the rest of the country, where casteism is a much bigger focus over development and vikas. And imagine even most males. I mean, you have a higher turnout of women voting in Bihar simply because the males are physically not in the state. They are out of the state, working somewhere. So even that alone, did not help the NDA win. It clearly tells you that caste remains, unfortunately, a much bigger issue.
That's a very interesting and valid point that Gautam just picked up. Mr. Bhat, I want to come to you. Like our research members as well were highlighting, that investors are now fearing that, considering there are a slew of state elections lined up in the next 2 years, the big one, of course, being Uttar Pradesh in 2017, that BJP may now turn populist, and eventually that's not good for the economic situation, because that's going to pressurize the fisc at a time when earnings are in any case, sort of in deep trouble.
Well, it is possible to argue that in 2014 the government really got a mandate based on its development agenda, and it is quite possible that the electorate now thinks that the development agenda has not been pressed ahead enough. So from now till at least 2019, or even to the UP election 2017 and next 1.5 years, if there is real push given to the development agenda, and you can see the result of this development agenda in terms of numbers on the ground and a slightly better feel good factor on the ground, I think things can change, because finally we have to appreciate that India is a very highly aspirational society. Maybe there are certainly some states which are not as aspirational, maybe bowed down by caste considerations and things like that, but development is caste neutral, is religion neutral. So therefore, if there is enough of development and people can see that their lives have changed, I think things can change quite dramatically, even from now till the UP election or the next general election. And we are really not 6 months into an election, we are 3.5 years into a federal election, and 3.5 years can change the situation on the ground quite dramatically. And I think we should give credit to Narendra Modi that he has done whatever he has done in the last 1.5 years, and the next 3.5 years, I think if the sort of investment that Railways is doing, the sort of investments that is happening in the road sector or in the mining sector, I think these are power sector. If these getting the power sector right, these things start really showing some results, I think things can change quite dramatically, and that is when I think the private sector will be emboldened to go to the drawing board and start thinking of the next level of investment. I think things can change today, because the development agenda has not really fructified into action on the ground. There is possibly a swing back to the caste factor, but these things can change.
A very less appreciated fact is that India is a large economy, $2 trillion economy, and magic does not happen in 16 months. Progressively, the trajectory is headed in the right direction. It's just that, every reform process has its own time and its own, curve to follow. Anand, before we take a break, I'm going to change the scope of the discussion and talk about the market behavior. In markets, it's important for us to figure out what is in the price and what is not in the price. So once the initial adjustment is over by Monday or Tuesday or even by Wednesday, do you think markets will look attractive once again? Because if you're buying stocks now, you are buying a BJP defeat, you're buying risk of a Fed move in December, and you're already buying earnings which have been subpar.
Well, Nikunj, I would think that the market is still too bullish on various things. If you look at the beginning of this year, we started with 18% expectation of growth. It has now come down to single digits. Consensus still remains double digits, but I think you'll get single digits and we will rapidly adjust. The surprising part is, despite that, everybody is still talking about 20% growth over the next year. And I don't see absolutely how. Today, every analyst report I read shows me 25 times FY17 earnings, which is after a 20% or more increase, as being, very fairly priced. We've forgotten that markets don't necessarily price stocks which are growing at 15% or less, or maybe even 5 or 7% at 22 times and think it is fair. If you look at what is purchasable in the frontline companies, I don't think any of them are pretty much purchasable unless you have a 5-year view and are prepared to have a cost of capital which is in single digits. So even on pure fundamentals, I think the market needs to adjust. We are still trading at, on an adjusted basis, 18 times current year's earnings. And then, of course, depending on how much for growth you expect for the next year, you have to bring that down by that number, which I don't think gives you too much scope for comfort, especially if there is any kind of turmoil in the international markets because of whatever the Fed does. So margin of safety doesn't exist. Does it mean the market will go down in one direction? No. It depends on where you start from, and also the fact that we have such a large market always leaves you some opportunities. So I would still remain reasonably cautious. I would still look at those areas where the government is looking at making a difference right now, because I believe that's the only place where growth will actually happen, and try and dovetail your investment policies along those sectors rather than all over the place, aside from those companies which can grow into the international market and are doing well already, or perhaps are turning around. One of the points I'd like to differ from what one of the earlier speakers, I think Shankar, mentioned, that the small cap companies are not because of government policy. The small cap or mid cap went into a recession largely because of what the earlier government did, because there was absolutely no action on the ground. So to a large extent, what you're seeing in terms of mid-cap and small-cap performance is the fact that there is some amount of recovery happening at various levels. There is some hope that some, projects may come on, some issues in roads will be sorted out, some banks will be willing to take some hits and give you some room for growth, and so on and so forth. So all of the areas that we see is because we have a government which is trying to do stuff. And I would think that that's the safest and simplest way of investing on the domestic side. The export side, of course, is great because if the market falls, if there is withdrawal of money, currency will also depreciate, export earnings will improve.
Sanjay, what is your understanding of what currently markets are pricing in? Do you think markets are already pricing in a lot of bad news, or there is still a lot of inherent optimism which is there for FY17 and beyond?
Nikunj, I think this whole bad news thing is being overplayed a little bit right now. Just about a month or two back, we were all talking about if we get a 50 basis point cut from the RBI, that's the manna from heaven that the market needs, and the whole cycle will get revived, etc., etc. So, we have changing goalposts from market participants, we have changing goalposts from the industry. At the end of the day, what you correctly said, that, in a $2 trillion economy, things are not going to change overnight in 18 months after 5-6 years of pain. Banks are taking steps to solve the asset liability problem, the balance sheet problem. Entrepreneurs and companies have gone bananas over the last 7 years in taking on debt and not understanding the implications of having such huge leverage balance sheets. So bottom line is, look at companies individually, look at investment opportunities individually. Government is taking steps. A government cannot take steps which, just have impact in 24 hours or 48 hours. So things are going to take time. I think whatever efforts the government has made in the last few months and some more efforts the government is going to make in the next few months are finally going to start to bear fruit in the next financial year. That's FY17. So, we all actually live from one news event to another news event, and we start, discounting that without looking at the bigger picture. I can understand as a trader that's a perfect thing to do, but if I'm an investor, these are the kind of opportunities which may come in tomorrow, day after. I would look at my select stocks, take positions in them, and then stay invested for 1.5 to 2 years. That's how I think people have made money for centuries. People don't make money by buying calls, puts, and taking positions for the short term. You got to find out your conviction plays, use opportunities like these, take your calls. You'll have some wrong, you'll have some right. But to say that you'll write off the Modi government because of what happened in Bihar, one small event, I completely disagree. A lot of bad news already in the price. Yes, 100, 200 points, so the Nifty may go down more. But look at individual stories. I agree to an extent that larger cap companies may not have much room in terms of earning growth, in terms of, they may be already stretched in terms of multiples. But I think the economic cycle, the cyclicality is in favor of India. Cyclicality is in favor of a lot of sectors in India. So therefore, position yourself. If you're going to cloud your judgment by these small events as an investor, I again use the word investor, not a trader, you will miss opportunities. Otherwise, these are the times to actually use opportunities and just stand back and sit tight for 1.5 to 2 years.
That's a true hardcore investor speaking out there in Sanjay Dutt. That's the point. Will people stop buying Maruti cars just because of what's happened in Bihar? Will people not buy Maggie now that it's going to be back on the shelves soon? And would Nestle not then have earnings eventually?
The simple rule of stock market is that good news and good prices, they rarely come together. Right now, news is bad, so prices could be good. When news was great in May 2014, prices were bad because markets were pricing in too much of good news and markets were priced to perfection. So I would still give benefit of doubt to the current administration, current setup. I don't think earnings are that bad because select stocks have still delivered. So you may not take a bet on the Nifty, but individual stocks will continue to do well. So I think one of those days you would take a bet on the haystack and say, look, I'm going to buy the Nifty, I'm going to buy the Sensex. It's time to really look at some of the sharp needles now. Individual stocks.
And tomorrow, day after, this entire week perhaps could be that opportunity that you could, give you that opportunity to go back to the drawing board, make out your list and perhaps start nibbling into the market. So that really has been the key takeaway from D Street today. But I'm going to thank all our experts for joining in. Gautam Trivedi, Sanjay Dutt, R Bhat, Ajay Bagga as well as Anand Tandon for taking time out and joining us to analyze now that Battleground Bihar is done with. How is the market and D Street going to react to that? In fact, on that note, let's also hear out from some top market experts, some fund managers that we chatted with on the CIO panel this Diwali, the CIO calculus on what they make of this verdict in the Bihar elections.
Obviously, the markets would have loved the verdict going the other way around. But having said that, I think very clearly, we are in a scenario where, state politics is important in the near term. But ultimately, we all know that the reform process, which has been stated very clearly, is on its way. We have had major reforms on the power sector. We have had a lot of impetus being given to roads and all, which are now getting fructified in terms of actual implementation. So I think, yes, it will be a very near-term impediment, but overall we remain as confident about the economy going forward.
Narendra, how concerned is the market now that BJP hasn't really come into power in Bihar? Could that really stall the reform process? Because GST definitely is big from a market's perspective.
I think if you see the slow derating of the market, if you see the one-year return, the markets have not delivered any returns. And in fact, if you look at the economy sensitive sectors, most of them have delivered negative returns in the last 1 year. So I think the expectations which were there in 2014 of very quick policy action, we have now realized that Indian politics is not just about Lok Sabha alone. And consequently, I believe that we have slowly reconciled to it. And that's why the market hasn't delivered returns in the last 1 year.
Could that change though, Navneet? The question is, when the government came in, there's a bit of a spike in all of those sectors as well. Since then, they have cooled off, as Narendra rightly said as well. Could there be a change over the course of the next 12 to 24 months, despite whatever may happen on the political front?
I don't think so. In state elections, there are a lot of factors at play. There are a lot of dynamics. Apart from the economic ones, there are a lot of other political and social dynamics at play. I don't think one should look at this result and then start thinking about how the markets will behave over the next 1 year. I'm sure the next couple of days this news will get digested and markets will move on looking at the global economy, domestic economy and the corporate profitability going forward.
We'll catch you with all the market action come tomorrow morning on The Market. It promises to be an exciting session, so do tune in.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.